Hello, everybody. Welcome to Market Moves. I'm Jason, the Wizard of Ops. Hey, Jay, and special guest Bruce. How are you doing?
Hey guys.
Hey, it's good to have you guys here. How was your Thanksgiving this past week?
That was pretty good. I mean, Mars was pretty low key. How was yours?
Amazing. I had family over one day we hosted, but then I did a lot of whole nothing and just did some housework, right? So it was amazing.
I'd like to welcome Bruce. Bruce is the head of VolumeLeaders.com. We talk pretty frequently, I guess you could say. And
Yeah,
while we focus a lot on option dealer flows and option customer flows too. Bruce, why don't you give us a little taste of what you do?
sure. So volume leaders exist to highlight institutional positioning that is, in one way or another, unusual outliers, in fact. And we do this a number of ways. There are a bunch of proprietary contextual metrics that are used to identify when a trade or a cluster of trades or a level is disproportionately large or disproportionately rare. And so anytime something like that pops up, it generally indicates that institutions are active, and I want to know when they're active so I can be active too. So the site helps to find opportunities that you might not otherwise be looking for. It helps to visualize charts and where the large positions are, and it helps you just sort of understand where you can define your bias and where you can define your risk, and hopefully make your losses very small and your gains very large by adhering to where positioning yourself along the lines of where they're positioning themselves as well.
Cool. Well, we'll hear from you a little bit more later, but right now, why don't we talk to Jay and give so he could give his vol and trade plan. Go ahead, Jay.
Yeah, let's jump right in. Let's just quickly do a quick recap. I know Bruce here, I can't wait to hear from him. He's got an exciting product. So just in terms of a recap last week, I had my eyes set on 59.50. I'll be honest with you, I missed my entry on this one by 10 points. It hit Monday and then it hit Wednesday overnight in the ES futures session. I missed my entry there to just write this out, right? That was the key point. We found consolidation there on Monday and Wednesday, and then pushed up, almost hitting our 60-40, 60-50 levels from last week. So congrats if you took that, nailed those levels as well. What I would quickly want to kind of go through here, a little bit, Wiz, obviously catalyst for the week. There's a lot of catalysts this week. We have PMI and prices this week. We have CPI and the JOLTS job openings. We have ADP non-farm. We have services PMI. And our favorite person, Fed Chair Powell, speaks on Wednesday as well. He'll be at the New York Deal Times. If you remember, that was infamous for Elon Musk telling the Disney CEO to go F himself about his ads. So it will happen at that deal, at that conference. Thursday, we've got unemployment claims, and then Friday, the big one, non-farm employment and the unemployment rate, the average hourly earnings, and obviously consumer sentiment and inflation expectations. Earnings are almost done. Yeah,
Do
go
you
ahead.
project, Jay, that we are going to hear anybody tell anybody else to go F themselves at this one? Will Powell say, go F yourself at the podium?
I mean, if there's going to be a person who'll tell him, maybe it's Trump. I don't know, right? He wasn't so scared of being fired by him, right? So if there's one, maybe that's it. But I'm hoping someone gives an F-bomb to someone there at this conference this year. All right, let's look at earnings. We still shockingly have some earnings, if you can believe that. Some of the big ones out there: Salesforce, Okta, Box, Chewy, Foot Locker, Dollar Tree. A lot of these will kind of, the remainings of tech, and obviously some consumer discretionary. American Eagle, another one to keep an eye out as well. All right, with that, A couple just like tidbits here I want to share. Shockingly, Black Friday sales rose 10.2% year over year per Adobe, which is quite amazing when you consider, we just keep going up and up and up since COVID for Thanksgiving. So really good article here. If you want to check that out, read it. The other thing I want to showcase is this graph. If you're still curious when the most volume occurs in a given session in a given time in a session, here it is, right? You got this like half hour at the beginning of the day, and then it just dwindles, 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 dwindles. And as we get kind of past that 2 p.m. post lunch, but it's in reality just the last half hour where we see the majority of volume coming in. So I was reading this over the weekend. I thought, I've seen this before, but never visualized it this way. I thought it was pretty cool. Thoughts here, Bruce or Jason? Any comments you want to make here?
Well, a lot of times, I mean, that's the time when like a lot of option dealers kind of do their last second, delta hedging or what have you. I mean, on Friday, they were pushing into needing to sell in order to delta hedge, all the way until the end of the day, and then probably some junior person monitoring the desk in the last 10 minutes is like, okay, we'll delta hedge and then we're done. Um, so a lot of times I see that as positioning for that. And in the beginning, I see it as initial positioning for overnight moves. In the middle, they don't do much unless they have to. So, I mean, that actually matches up quite well with kind of option, hedging.
Great. Bruce, anything you want to add on?
I don't have much to add to this. Positioning's been pretty quiet in the indexes as of late, so there's not really much to share here. It's kind of business as usual, kind of chugging along. So I don't have any real great insights to share in terms of anything unusual happening.
Great.
All
right,
so it's usually a pretty slow week there at Thanksgiving. Not much to discuss.
No, and it rallied. I mean, really quickly, December seasonality. A lot of people ask me about that. Seasonality kind of favors up in December from past data. You can kind of see here the first couple of weeks actually are a little bit choppy. A little bit of that is due to, tax loss harvesting that might be occurring. But the other fun fact here from Almanac Trader, I love him for these random like stock market facts. The first trading day of December, usually never kind to traders. It typically close to, if you look at the S&P 500, it is typically down 39% of the time, going back dating since 2001. So a little bit of interesting stats here. Almanac Trader does a really good job just kind of sharing those. I really wanted to focus on this stat here. I think this is just incredible. Wiz and Bruce. So what this is basically saying, we're essentially on store unless there's something that blows up here in the next month, right? For back-to-back 20% gains in the market, which is just, it's only happened 6 other times in history, just to bring that up to you. And that third year, you would expect we'd cool down, and we did. There's 2 years, 1977 and 2000. But for the majority of those other 4 instances or 5 instances, the market on average gained an additional 12.3% the following year. And so, the median, it was about 12.8, 75% of the times it's higher. So this I just find incredible. And then if I can kind of, jump in here, you look at the mid caps.
It kind of looks like it was mostly the .com boom that weighted those statistics.
It was. Yeah. It was. I mean, if you look at even here, yeah, you have the 50s, right? A couple times, and then right before the .com, and then these past few years. Bruce, you were going to say something?
Oh no, I was just echoing Jason's sentiments. It does look heavily weighted towards the .com, which I didn't notice at first, but yeah.
That's
days. It's kind of nuts.
Yeah, that's where all that average went up. 33, 28, 20. It's all higher than the average of 12. Yeah. And those are 3 .com boom years. But I guess that tells you just because there's a boom doesn't mean there'll be a bust right afterward.
Yeah. That's right. So something to keep in mind. And if we look into here, obviously predictions for next year are starting to come in. We're almost at the end of the year, right? So 2025 predictions, just take the 59.90 from last week when we closed earlier in the week on that. But on average, the majority of these analysts, UBS, Goldman, Morgan Stanley, about the 6,500 range. On the high side, you got Yardini Research at 7,000. So quite a bit of a range again for next year in terms of predictions. So pretty interesting and fun here. Any
But
thoughts
all
here?
bullish.
Yeah. I don't think I saw a bearish outlook from anyone next year. Prediction.
Hey, you know what to expect then.
That's right. Find the dip and enter, right? And then last but not least, like corporate buybacks. This has been a big one, and I was gonna, kind of curious as like, we're seeing some of the highest levels of corporate buybacks since 21, 20 even. This just intrigues me just because they're keeping stocks afloat, especially in big chunks, right? Apple's a big, stock buyback, corporate buyback. A lot of other companies are. I just found this interesting, kind of keeping an eye on it, on how that's going, and then obviously that helps with any of the S&P 500 buybacks year over year as well. So that was the news. Let's jump into Vanna, our key levels for this week. This week was really weird, Jason. Not gonna lie. It looks. I mean, if you even look at the Van exposure here, the left tail, the right tail, right, like everything looks like it's bearish. It's gonna sell, right? And I think a lot of this is gonna be, put in the yellow here. A lot of watch how the volatility, the VIX moves. This chart will move with the VIX, right? Doesn't mean we can't go up, but if you see a catalyst or something out there, there's not a lot of put support, right? So first of all, we'll just rip and sell down below. But then there are some key levels to the upside. And so, in terms of those levels here, like 6,000, from an all expiration view was a big level. 59.60, 59.50 was a big one. And then to the upside, like you got a cluster here sitting of resistance 60.45 to 60.55, and then if you miraculously get through that one and volatility keeps compressing, then you're looking at 60.95, 6100. I'll let you both chime in here just a second. On the weekly, we did have, and we actually bounced off here overnight, 60.25, 60.20. This was like a medium support on the weekly view. So if we hold that level, good chance we go see our highs from last week. If we don't hold that level, more than likely 6,000. And you start, if you lose 6,000, this thing's just it's a domino effect is how I look at it. So Wiz, any thoughts?
Yeah, no, I agree. I think that the return to risk right now is on the downside. I mean, I know there's seasonality, maybe like a little bit of fading up in the beginning of December, but overall, market makers, in our data set, market makers have not been this short. I know that means, in some people's ears, that means people have to buy, but there's a lot of in the money calls for customers and, annualized customers, people who do collars at the beginning of the year, have like a dispersed stock portfolio, and then, use that collar to hedge it and then roll it at the end of the year. If those calls are in the money, which many of them are at 4,000, 5,000, and 5,500, when they roll, they're going to have to pay money. In order to pay that money, they're going to have to sell. So that's been kind of one of my theses a little bit, kind of, and it's almost like I kind of say it's like, Vanna, you can never escape the Vanna, but you could delay it for a while sometimes, but it's hard to escape. But yeah, until I see that positioning happening, I'm not convinced that downside won't be seen.
Yeah. Bruce, any thoughts on your end?
No, the indexes have been quite quiet, as I mentioned earlier. So this is one of those things where if and when things start to turn, we're likely to see leverage trades pop up that are unusually large. So I'd be watching things like SSO and SPXL and SPXX and of course the TQQQ and SQQQ are probably the most actively traded leverage ETFs for the indexes. So in the event that those pop up with size, that would certainly get my attention, and I would want to prepare accordingly. But it's been relatively quiet. Same, and I'd say the same for anything that's in the VIX space. So there are 5 or 6 VIX ETFs if anything pops up that is unusually large, the site will tell us right away, and that's a pretty good indicator of watch out.
Yeah.
So, yeah.
Makes sense. Yeah, yeah, quite weak otherwise. So those were at least the key levels here. I mean, if you look at a lot of the weekly intraday, even Jason, they look like B of A paradigms from a charm view. They look like that with the Vanna even. So I
Uh-huh.
found that very interesting. What that typically in my past, I've seen that those are iron condor, someone sitting with massive size on these two edges, and they just don't want the market to leverage itself out of that, right? So
Yeah.
I mean, keep an eye on that. I mean, you can clearly see it, like all that green. This is just not atypical of a
Yeah.
weekly Vanna chart. So someone's wanting to really protect their position. You can tell here. Gamma wise, like nothing stood out there. I mean, obviously we've got the twin towers, I'll call them 60-50, 60-55 that exist there, 6100, and then to the downside 60-25 and 6000. VIX, shockingly, it has a little bit more room down. To me, the 14 pivot is a big one I'm watching for, Bruce and Wiz here. If it stays below 14, I think there's a good chance like volatility will compress even to what we had this summer potentially, right? So that was where we had VIX in the 11s and the 10s potentially even. So keep an eye on that. The volume profile, I'll quickly spend 2 seconds here. I mean, to me, this is the zone, and I'll kind of show it to you. Like if we see a breakdown, this is the area I want broken down, and then I want to start chasing some of our election volume that exists out there from November 4th. So, you look at this gap. There's a lot of gap in that chart there. So could we test it? Sure. What must we? Not necessarily. So just keep that in mind. So last but not least, my key levels for the week: 60-25, 6,000, 60-45, 60-55. Those are like my immediate ones. So, this zone here, I'm curious to see if we're going to consolidate it, chop, as I said, and then use it to springboard and get our next rally, our Santa Claus rally, whatever you want to call it. But do we have another big push up? So I am not leaning with a bearish bias this week. I do have my bullish bias levels shared with you. If we have a breakdown of that 6,000 or 60-25, that's where I want to add, right? Otherwise, I think right now I'm not seeing what I need to see out of the bears, and until they can take out some of these key levels, I will find dips to buy is how my world will go. So again, that is our Vanna view. Even from a delta view really quickly, if we look at puts and calls here, I mean, you can clearly see where puts are sitting here. Is at 6,200. We've got 6,000 and then 5,950. And then if you look at the calls, here's where your calls are at from a delta standpoint. So 60-55, 6,000 and 5,900. But look at the size, right? Puts versus calls. Definitely calls are outweighed at this point in time. Back over to you.
It usually creates a gamma kind of push, but yeah. So, all right, Jay, is that all you got, or?
That's all I have.
All right. Well, Bruce, we have you on, and let's hear some stuff that you have that you've noticed over the past, I guess,
Sure.
weeks or whatever.
I'll share my screen here. I want to shift the focus over to bonds. Let me
Can you
know.
share your screen?
Yeah.
Just a second here when you can see it. You guys able to see this?
Just a second. We're looking at ourselves, so we're gonna get that.
Oh, did I share the wrong screen? I probably did. Give me 1 second. I apologize for the annoyance.
The infinite. While Bruce is doing that, Jay, let's talk about how Bruce's picture looks about 10 years ago on the market
Yeah.
moves introduction.
This is not my home.
It's like, that's a good looking dude there. Where is he?
Yeah. All right. I've been an engineer, technical person for 30 years, and I can't share my screen, which is pretty typical. It's always the easy things that vex me. So All right. So bonds, we talked earlier about how indexes have been relatively quiet with regard to positioning in volume leaders, but the bond space has been very active. So I wanted to draw attention to that. What we're looking at here is a chart going back to July. Each bubble on the chart represents an institutional trade, and each number on the bubble represents its ranking. So one of the contextual metrics that Volume Leaders provides is that it ranks every trade in the data set. So anything that's in the top 100 gets highlighted. Anything else is not specifically numbered or called out. And these filters here allow you to generate charts that show certain things and hide other things. So this one right now is showing anything that's ranked in the top 50 over the last few months. And what you can see down here is that institutions got really, really active going back to late October. And this trade here, the fourth largest one, got my attention. But some of these other ones too did. And if I expand this to top 100, you'll see that this cluster just gets larger and larger. They're very, very active down here. And you can see they weren't so active up here. They were after this spike in August. And this is a pretty common phenomenon. We can look at any stock over any period of time, and the largest trades do generally tend to appear near local highs and lows and swing highs and lows. So when TLT started printing these trades, everyone started taking notice. Certainly I was one of them. This is the same look with just the levels shown without the trades themselves. And one of the other things Volume Leaders does is it generates these levels based on institutional positioning. So you can see the first, second, fourth, fifth, and third rank levels are all down here. These are levels that go back to the beginning of time with regard to when TLT began trading. So this 94 zone, going back a long way, is a really important zone and a really active zone, and they're being active in it again. If we look at this is a sort of a zoomed in view, you can see it a little bit differently, but the other ETFs in the same space are also showing interesting positioning. This is TMF. This is the 3x leveraged ETF for TLT. Mm-hmm. You can see we got some big ones here back in June. We got a really big one here before the spike in August. This is something you see. We got number 6 here back on the 25th of November, and we're trading above it. We can see this has been the response since. We got a little move up, we got a test, and then we continued forward. So this is generally a bullish sign. VGLT, though, this is the one that really caught my eye the most. This is just another Vanguard ETF, which is identical in construction to TLT. And the second largest trade since inception came in as a dark pool sweep. Dark pool sweeps are an important type of position that generally suggests urgency, and that also suggests that they're trying to hide their trade by trading on a dark pool. So the second largest one hit here at this low, and then the largest one hit the very next day. This was a Friday that we got that big gap up over the weekend. Then we got another large trade Monday and some continuation forward. So this to me is just more evidence to suggest that TLT is positioned bullishly currently. But the interesting things go beyond just treasuries. The entire bond space is getting a lot of activity. This is AGG, corporate aggregate bonds. We got number 3 and number 2 in close succession. That is a rare event, just as it was rare to see number 2 and number 1 here. So we got number 3, we got number 2. We traded down through them, just as we often do, because the institutions don't usually hit the exact absolute highs and lows of the swing. They buy on the way down, they sell on the way up. I'm sure I don't have to tell you guys that. And then we got a move upwards. So we're trading above both of them now, which is an encouraging sign if you're long bonds. Here's another view. We can see we got number 8 here back in February. We got a little bump. Traded back down, and now we got number 3 and number 2 here, and we're trading back up. So just wanted to illustrate that these trades do tend to appear near turns. And then lastly, BND, which is nearly identical to AGG. On the way up, we got number 6. We got some overshoot, some exhaustion, traded back down. And then we got number 2 here. These are all in this, in the same period of time. So this zone, see all these levels here. You see all these levels here. This is a very active place for institutions who are interested in trading bonds. So this has kind of been an area of focus for all the folks in the Volume Leaders Discord and all the people that care about bonds. And it's getting a lot of attention and conversation lately. So that is, to me, more interesting than what's happening in indexes, at least from a positioning standpoint. There's, I could pull up SPY charts and QQQ charts, and you'll see lots of positions on there, but nothing that is so egregious or so unusually large or rare that we have to really pay attention to it. So,
Yeah,
anyhow,
that's very interesting, and
that's what it's
especially, I mean, after I guess Trump won, we saw that huge downturn in bonds, and I didn't understand that so much, just because this the Fed is in a cutting cycle, right? Like,
Mhm.
and you would think that cutting cycles would be, that rates would be coming down, so you'd think bonds would be going up a little bit, but
Yeah.
I don't know. It was kind of it's kind of a strange move fundamentally, but I guess people were taking their time. I don't know.
Yeah, I don't know either. It's difficult for me to explain the thinking behind it, the rationale. I struggle with, aligning the macro landscape with the actual positioning. There's usually a bit of a disconnect between what we're hearing and how they're actually behaving. So, but when they started hitting it hard here, that's when I started to really pay attention.
Yeah. Jay, do we have TLT up on Volland?
I do. I have it up here for you.
So let's check it out. I mean, TLT. So a lot of times I don't trust TLT positioning in Volland as much, just because it's such a small portion of the overall rates market.
Mhm.
Rates tend to be more in the futures and SOFR futures and stuff like that. That's where a lot of that traffic is. But if you trust completely in the no arbitrage rule, where whatever positioning you would see in those rates markets, you would also see in TLT, because you don't want any arbitrage. Somebody would find it and utilize it. So, what are we seeing here? Is this is Vanham?
This is
So,
Vanna.
and
Go
puts
ahead.
and calls. So that looks like, are those in the money puts, or are those the green above, or are those calls?
Let me flip them 1 second. Oops.
So a lot of that was in the money calls. So people are
Oh,
selling calls on their TLT positioning quite a bit. Um,
Interesting.
and that's usually like that's kind of I don't want to say a normal, but a in indices in particular, a lot of times people will accumulate a position and then sell calls against it.
Mhm.
Which it almost seems like they're doing that here, but there seems to be one big huge bar. What is that? I can't even
a
see it.
hundred, 100 on it.
At 100. So a lot of people are selling $100 calls
Interesting.
on this TLT positioning. So that might end up being like a top for you, Bruce. Like,
Yeah, it might be. 94 is a really, really important level here. And then I'd have to look to see where the next really large levels are. But I'm most curious to see how it behaves here at 94. I want to see if they can get out above it or not. It looks like
mhm.
it's hit just a tiny bit of resistance here, which is not unexpected. But I want to see how things shift if it gets above that. And
Yeah,
I'd be
I
also
mean,
very curious to see what Volland shows and how the option positioning might change as a result of that.
yeah,
Yeah.
it's good that that the two sources have a lot of synergy. I think
Yeah,
that's why you're on the show.
yeah, yeah. Well, yeah, and I
um,
appreciate you having me. This
but
this
yeah, I
is
mean,
endlessly interesting to me. I really enjoy this stuff.
yeah. The other thing is, when it comes to something like TLT too. I mean, at the end of the year, there's a lot of rebalancing.
Hmm.
A lot of 60/40, a lot of those like targeted funds that just allocate between bonds and equities. And equities have gone up a lot and bonds have been down. So
Hmm.
it wouldn't surprise me again, equities get sold a little bit and bonds go up. It's not usually a lot, but when you have a bad a rough Vanna profile like we see in Volland for equities, maybe
Yeah,
something a little bit of momentum can pick up. But
perhaps.
I don't usually do. That's usually like some intraday kind of stuff, though. The rebalancing, like intraday variability. So it's kind of difficult to do anything swing based on that. But
Hmm.
yeah. So I don't know. Let's see if nobody has commented on us today. We have 292 people, all silent.
They're enraptured.
It's fine. It's fine. It's a Monday after a long weekend.
We left
We
I'm
blew
pretty
their
sure
mind.
everybody's still asleep. You got that winter blues kind of thing going on.
Yeah.
You know,
everyone's just full from Thanksgiving. It's
yeah.
just sleeping it off.
But you know,
So
it is really cold. I don't, we all live here in Virginia, but this year got really cold fast. I'm not gonna lie, especially this week. Like today, it's
Yeah.
what 25, 28 degrees today.
It's pretty cold. A week ago it was balmy, and then like overnight it
Yeah.
got into the 30s.
Yeah, just like that.
Bizarre
polar
weather.
vortex thing going on.
Yeah.
That's right.
All right. Well, if you guys have nothing else, we can say we could sign off at 9 o'clock, which is half hour. That was like some of our targeted time. So
Yeah, we hit our target finally today.
all right.
Well, Bruce,
So,
it was
all right, guys.
amazing.
Bruce, may
Hey, I appreciate the invite.
Volland help you in your future trading ventures.